that the life insurance, it does come with after-tax dollars. The policy is either owned or either by a trust or personally. So when we work with our attorneys and we're looking at estate planning, you may hear us talk on this slideshow about irrevocable life insurance trusts or ILITs. Those are things that we can help create for you based off of your unique situation. The other interesting part about the life insurance is cash. The value grows tax deferred. In some states, like here in Florida, life insurance is also a protected asset. So you can't be sued for it. Not every state is like that. Obviously, for those that are here in Florida. But really, the other thing you're going to learn today is how we're using leverage inside these policies. With life insurance, you can actually borrow from your policy, and that's what we're going to be talking about, having some tax-free withdrawals. And in most cases, the life insurance death benefits do become tax-free to the estate. If there is an irrevocable life insurance estate, we're going to actually include that outside of the estate. And again, we don't expect you to remember everything. Just know that when you work with us, you're going to be working with Colin, myself, Joel, and the entire team at Schlechter. We're going to be bringing attorneys on the phone. We can work directly with your CPA and attorneys if you already have an attorney that's going to be creating your trust and so forth. So big thing is after tax, deferred growth, tax-free distributions, and a tax-free death benefit. So those are the main advantages we're going to be talking about today with the life insurance. So why leverage life? It's a proven strategy. It's been around for over 2 decades, almost 2 decades. And I'm sure everyone on this call has bought something on leverage, whether it's your house, whether it's a rental property. You use other people's money to purchase large things. So we found in the industry that not only with life insurance, because of the rates are larger inside the insurance policy than it is to borrow, that's the secret behind leveraged life insurance. It does give us that flexibility of being able to borrow other people's money, in this case, banks. And we're going to talk about why banks love this as a strategy. The big thing is that asset is going to outperform the borrowing costs. That's what we talk about is arbitrage. Again, when we sit down with you on your unique case, we're going to build studies. We're going to build case studies. In fact, Joel's one of our guys that actually helps build these illustrations for us to really help meet your family's needs. So there's the interesting part we're going to be talking about today is indexed universal life insurance. So for those that don't know that, the big thing is there's no market volatility. Unlike real estate or stocks that go up and down, with index universal life, there's only positive years. There's never a negative year. You just don't earn interest in the negative years. So that's why banks love this as an asset class to be able to loan against. They love having this on their balance sheet because there's very, very low default risk. And there's 100% loan to value on cash policies. So some common use cases we're going to be going over today is estate planning, tax efficient wealth accumulation, being able to actually take income. And one of the favorite things we love doing is building a legacy, not only for yourself, but also for your generations to come. Similar to what some folks may know is like how the Rockefellers have kept their wealth over and over, generation upon generation. So again, we're going to be looking at the goal for today's meeting is to give you a high level. We'd love to have this conversation with you to help build and structure what looks exactly for your family and to see how leveraged life potentially will fit into that. This is a basic premium financing structure. Again, this is very high level, but we have the client, we work with the bank. In this case, we're showing you having a trust. So what happens here is the trust actually borrows money from the bank. That insurance policy is used as a collateral assignment as a cash value. And the client or the trust in some cases pays the interest. Life insurance company gets involved. We pay the premiums there. They issue an insurance contract. And then ultimately we get to number 6, which are our beneficiaries and so forth. So when it comes to premium financing, this is very kind of high level. Every situation is important to sit down and whether we need the estate planning attorney on the first phone call or once we try to understand what you're trying to do. Again, there's so many different unique strategies and how to use this. When you sit down with Colin, Joel, and I and our team, we're going to help build that for you. For those that are just joining, The chat function there does have our information to be able to contact us afterwards and set up a personalized strategy meeting.